What can you do to get your financing offer accepted when you're going up against 3, 10, 15 other offers, sometimes cash offers in this crazy market, and the sellers don't want to accept your offer because you have all these contingencies in your financing offer and they want to take a cash offer and close in 7 days. My name's Steve Calabrese. I'm a loan officer with Equitable Mortgage down here in Southwest Florida. And in this video, we're going to go over the 3 things that you can do to get your financing offer accepted when you're going up against a bunch of other offers or cash offers in this crazy market. So a lot of people don't even understand the difference between a pre-qualification and a pre-approval. A pre-qualification doesn't mean anything. A pre-qualification is basically a borrower gets on the phone with the lender and says some things, and the lender says some things and says, yeah, you can probably qualify for a loan. But they don't have a credit report, they don't have a loan application, they don't calculate their debt to income ratio or anything. They're basically just having a conversation, and well, if it sounds good, then they're pre-qualified. Now a pre-approval, if you're putting a pre-approval offer in, you're pre-approved, that means that you filled out a loan application with a loan officer, they've calculated your debt to income ratio, they've pulled your credit, and well, it's the loan officer's opinion that you're gonna qualify for a mortgage. So they're sending you a pre-approval letter, and 95% of the time you put in a pre-approval letter with your offer, and that's what the seller and the selling agent is looking at when they're deciding whose offer to take. But you can actually go one step further. You can have your loan pre-underwritten. And a lot of loan officers don't want to do this because it's a lot more work on our end, on our processor's end, on our underwriting department's end. So a lot of loan officers don't really want to do it. But if you're serious about getting your offer accepted, you can put a pre-underwritten offer in, and you're going to, I mean, that's pretty much a cash offer. So what does that mean, a pre-underwritten offer? That means that, yeah, you're not just pre-approved and the loan officers ran some numbers and it sounds like, looks like you're gonna qualify. It's that you actually get all of your loan documents in, you get all of your forms in, and you put that loan file in front of an underwriter. And the underwriter says, well, you are either approved or your loan's not approved. There's no in between. So if you have a pre-underwritten loan, when you put your offer in, that, and you can say on your pre-approval letter or on your offer letter that you have a pre-underwritten loan, there's a loan commitment with your offer, well, that seller is much more apt to accept your offer versus some Joe Schmo with a normal pre-approval letter. The second thing is what's called an appraisal waiver. So if you're putting 15, 20, 25% down and you're a good borrower, not an FHA borrower with 3.5% down, but you have a nice down payment, you have a nice credit score, you have a nice debt to income ratio, well, you may not need an appraisal. And how do we find out if you need an appraisal or not? Well, we have to run every single loan file before it goes through an underwriter. We have to run every single loan file through what's called automated underwriting. And automated underwriting is either gonna say loan is approved and eligible, or loan is not approved and is ineligible. And well, underneath that ineligible or that eligible print is gonna say appraisal needed or not needed. So a lot of times if you have nice down payments and you have a nice, there's an even solid overall borrower and the price of the home is reasonable, you don't need an appraisal. So the smallest thing can change through the loan process, through the loan approval process, and you all of a sudden you might need an appraisal. So it is more risky. But a lot of times you don't need an appraisal. And we see this a lot for refinances. If someone has a bunch of 20, 30, 40% equity in their home, they don't need to get another appraisal because, well, you're a good borrower, so why do we care? And the third thing, and I've had offers this week get accepted just because I called the listing agent up and said, hey, we can close this thing in 21 days. They weren't pre-underwritten, we didn't have an appraisal waiver, but I took the time to call them up and say, hey, this is a solid borrower. Like, this is A+ borrower, and we can close in 21 days. And a lot of the times the agents don't understand that, and they don't think that I'm like being real with them, but I'm like, realtor, we can close the thing in 3 weeks, no problem. And as long as everyone's on top of things and you order the appraisal immediately and you have all your documents in and the borrower is on your team along with the loan officer and the processor and everyone, and understands that we gotta close this thing quickly, it's very doable. So these 3 things, and the 4th thing would be just the loan officer calling up the listing agent and just saying, hey, is this a solid borrower? If you do 1 or 2 or 3 of these things, you're going to get your offer accepted every time.